We are entering one of the biggest wealth shifts since the dot-com era, and yes, this goes beyond just AI. I'll show you. Right now, our economy, measured through a number called GDP, is about $30 trillion large, and the largest spender in our economy is not Nvidia, it's not Apple, it's not Amazon. It is the United States government, who is contributing around $7 trillion out of this $30 trillion of total spending that happens in our economy. The Trump administration has drastically changed where the United States government is spending the $7 trillion compared to the Biden administration 12 months ago. And the reason why this matters for you as a financially savvy investor is because the United States government just released their 2026 spending plan, which shows us where the next 5 wealth waves will be. In other words, they just told us where they're going to be spending this money. So in this video, I'm going to show you the 5 industries that the United States government is looking to invest money into for 2026 with ETFs that could potentially benefit from this funding from the United States government. But of course, investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube, because even if the United States government is investing their money into an industry, it doesn't guarantee that the ETF, that the stock, that the industry is going to grow. Industry number 1, and the most obvious, is artificial intelligence. A few months ago, the United States government published a report titled Winning the Race, America's AI Action Plan, where they made it clear that they will spend whatever they need to spend to win the global race for artificial intelligence. But just saying investing money in AI is so broad because there are so many different types of AI companies, there's so many different layers vertically in the AI industry. So let's get a little bit more specific as to the 3 places where the United States government is allocating money specifically into the AI industry. It's AI infrastructure, it's data centers, and semiconductors. Now I'm going to talk a little bit more in depth about infrastructure in just a little bit, so I'll hold off on that for just a minute. But let's start with data centers. Every time you go into ChatGPT and you ask it to draft an email for you, that information gets stored in the cloud. Now the cloud isn't in the clouds, the cloud is in a data center. A data center is a physical building that has all these chips and computer brains inside that is storing this data. So it's a physical piece of real estate that has all this information. And now with the advancement of technology, with the advancement of AI, with the advancement of just storage on the internet, because everything is on the internet now, we are needing more and more data centers. And read what President Trump signed earlier in 2025. Executive order by the White House, accelerating federal permitting of data center infrastructure. What does this executive order do? It allows the federal government to start selling off federal land to allow the building and construction of data centers. But that's not all. The Trump administration has also encouraged foreign investors to invest tens of billions of dollars to build data centers here in the United States. And if that wasn't enough, President Trump has also been working to broker deals with private companies here in the United States to invest hundreds of billions of dollars to build more data centers here in the United States. And then of course we have semiconductors, which are kind of like the brains for all of our computers, and the United States government has already allocated hundreds of billions of dollars to semiconductor manufacturing through the CHIPS and Science Act. Now the CHIPS Act was actually signed during the Biden administration, but the Trump administration is now working to impose tariffs on countries around the world to incentivize companies to buy these semiconductors and chips from other companies here in the United States, as opposed to countries like China. But again, that's not all. We've also seen the White House invest $10 billion into Intel to incentivize them to build more of these chips in the United States. And in November, Fortune released a piece talking about how Trump wants to rebuild America's manufacturing by investing in more semiconductors here in the United States. So could this create an investment opportunity? Absolutely. Could we be in an AI bubble that's going to pop? Absolutely. Could we enter a recession and markets crash? Absolutely. But for financially savvy investors, if you want to know where the government is allocating money, it is pretty clear that we're seeing more investment by the United States government into AI. So let me talk some specifics about ETFs that could benefit from this. But again, I'm not telling you what to invest in. I'm just showing you how to think like an investor. SKYY Sky is an ETF created by First Trust that gives you exposure to cloud computing, which can kind of give you exposure to AI infrastructure. If you want to get exposure to data centers, it's an ETF that's titled DTCR. This gives you exposure to companies that are in the data center and digital infrastructure business. If you want to get broad exposure to semiconductors, there's an ETF titled OXX. This is an ETF created by iShares, which of course gives you exposure to semiconductors. And then if you just want broad exposure to AI and automation and that entire space of the application of AI, there's a couple of ETFs that are out there that are kind of popular. One is BOTZ, BOTS. Another one is CHAT, CHAT. BOTZ gives you exposure to robotics and AI stocks. CHAT, CHAT gives you exposure to generative AI and technology stocks. I'm going to say this again. Investing has risks. I'm not telling you what to invest in. I just want you to start thinking like an investor to understand where is money potentially moving, how can this create an opportunity, but I need you to think about the risks before you invest your money. So now let's move on to number 2. But I should also say, for those of you that are investors or want to become an investor, I have a free investing masterclass where I walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. I'll even show you the exact framework that my firm and I use to research investment opportunities before they hit the headlines. It's a completely free masterclass, and when you register for it, you're also going to get access to Market Briefs, which is my newsletter for investors, completely free as a complimentary bonus. And at the end of the masterclass, for those of you that are interested, I'll present you the opportunity to purchase research from my firm. That way my firm can do the work, and then you can see the investment opportunities based off of the research that my firm does. So if you want to get the investing masterclass and Market Briefs all for free, all you have to do is register. I have the link for you down in the description below. The second place where the United States government is putting a lot of focus, time, energy, and money is into rare earths. Rare earths are a group of metals that are used to build pretty much everything from technology to defense to energy systems. And previously, the United States, along with many countries around the world, have been sourcing these rare earth metals directly from China because they're the leading refiner of these rare earths. Well, now, because of all the tariffs that the United States government has put onto China, because the United States government wants to become more independent, China has begun restricting these rare earth exports into the United States. And this is where the Trump administration wants to do a few things. Number 1, the Trump administration is working to build our own rare earth supply chain here in the United States so we can become less dependent on China. Number 2, the Trump administration is working to build more global partnerships with other countries like Australia and Japan. That way we can become less dependent on China, and other countries around the world will also then buy less rare earths from China. And number 3, the Trump administration is working to invest money from the United States government into private companies here in the United States to encourage these companies to build more rare earths here in the United States. More specifically, the United States government has invested hundreds of millions of dollars into the MP Materials stock to encourage them to build more stuff here in the US. Could this create an investment opportunity for you? Maybe. Personal finance is personal. I can't tell you what to invest in. What we do know is that the United States government has committed $1 billion to rebuild our rare earth supply chain here in the United States. So if this is something that you're interested in, again, I can't tell you what to invest in. Here are a few ETFs that you may want to consider. REMX. This is an ETF created by VanEck, which gives you exposure to rare earths and strategic metals companies. If you wanted to be a little bit more broad and invest in metals and mining companies, you can consider PICK. This is an ETF created by iShares that gives you exposure to global metals and mining producers. Or if you want to be even more speculative, more risky, you can invest in some of the companies that the United States government is investing their money into. For example, LYSDY. This is a company called Linus, which is an Australian company, but the United States government has invested their money into it. And then, of course, like I mentioned earlier, MP Materials. MP Materials, ticker symbol MP. This is a company here in the United States that specializes in this type of rare earths. Investment opportunity number 3 is American industry. We know that the Trump administration is focused on bringing business and manufacturing back into the United States, and there's a few reasons why we're seeing this happen. Number 1 is because of national security. If we can produce more products here in the United States, we become less reliant on other foreign countries to produce all of our products. Number 2, this is happening because of tariffs. The United States government is taxing goods coming from foreign countries into the United States, which effectively makes it more expensive to manufacture in China or India or Mexico to incentivize businesses to move their manufacturing back here into the United States. And then, of course, it's just number 3, economic competitiveness, because the Trump administration is pushing more for the Made in America tag. Now, I want to make it clear, my goal here is not to be political. I really don't care who is in the White House. My goal is for you to be better with money, and the reality is this is building on top of what the Biden administration did as well, because the Biden administration signed a $1.2 trillion infrastructure bill, which that money is still being used today. And this is where the Trump administration is working to build more manufacturing on top of that. The Trump administration has secured a $550 billion investment from Japan to invest manufacturing in the United States, and Trump's new tax plan, the One Big Beautiful Bill Act, is incentivizing businesses with tax breaks to bring their manufacturing back in the United States. So if you believe that American manufacturing and infrastructure has more upside, there are ETFs that can give you exposure to that. Again, I can't tell you what to invest in, just examples, so you can start thinking like an investor. ETF number 1 is XLI. This is created by a company called Spider, SPDR, and this gives you exposure to industrial companies, things like aerospace and defense. Number 2 is VIS. This is created by a company called Vanguard, which is again giving exposure to industrials. This ETF invests in stocks that convert unfinished goods into finished products here in the United States. Then you have PAVE. This is an ETF that specializes in investing in infrastructure and development companies. These are stocks that specialize in producing raw materials and heavy equipment and engineering and construction stuff here in the United States. And then a little bit differently, you have XTN. This is focused more on transportation. So this is created by Spider SPDR, which gives you exposure to railroads and trucking and freight, because if we have more manufacturing here in the United States, we have to transport more goods from one place to the other in the United States as well. Investment opportunity number 4 is defense. And when the United States government now talks about defense, it isn't just about tanks and guns, it's also about border enforcement, immigration, and geopolitical defense. So if we take a look at where the money is moving, the Trump administration is now proposing the largest budget ever for defense in response to the rising geopolitical tensions with countries like China and the Middle East and Russia. The Trump administration is also allocating more money for mass deportations here in the United States. And what that means financially is when somebody gets deported here in the United States, you first get sent to a detention center, a private prison. And these private prisons get their money from none other than the United States government. So if more people are getting deported, more money goes to those private prisons. Now this is where I want to make something very clear. A good investment decision has to make 3 types of sense. Number 1, it has to make legal sense. I don't want you doing illegal things. Number 2, it has to make financial sense. You want to invest your money where you're going to see an upside. But number 3, it also has to make moral sense. I'm not going to be the judge of your moral compass. My goal is not to tell you what to believe in. My goal is to show you what's happening financially, and then you can put this compass together. That way you can make investment decisions based off of what's right for you. There are certain things that I will not invest in because they don't make sense for my moral compass, but I'm not here to tell you what to believe in. So let's break this down. Number 1 is XLI. This is created by SPDR Spider, and this is giving me exposure to the industrial defense stocks. And then there's ITA. Again, this is created by iShares. This is giving me exposure to aerospace and defense companies here in the United States. And when it comes to private prisons, there are no private prison ETFs that I know of, but there are private prison stocks on the stock market that have benefited from the Trump administration doing more deportations. Again, I'm not telling you what to invest in, just trying to get you to think like an investor. And last but definitely not least is energy. And this is where this whole video is gonna go full circle, because in the beginning of this video, I talked about AI infrastructure, and I said I'll come back to that. Well, let's come back to that. Energy isn't just about oil anymore. It's about power grids and powering up data centers and AI tools and becoming energy independent here in the United States. But the reason why energy is so interesting, because on one hand, we want to become more energy independent and rely less on foreign countries for energy here in the United States. And on the other hand, we are making huge investments into AI and technology, which has a huge energy requirement because all those data centers, all those computer chips require a lot of energy. And this huge demand and need for energy is where the Trump administration is looking to make investments again to help boost the energy industry. For example, the Trump administration has created the National Energy Dominance Council so we can become more energy independent. President Trump has said that he wants this to be a golden era for American energy. The Trump administration is taking money away from green energy funds and allocating that money towards fossil fuels and nuclear energy. And finally, we're seeing a new renewed push for nuclear energy here in the United States. Can this create an investment opportunity for you? Maybe. But if this is something that you're interested in, here are a few ETFs that you can consider. Again, not telling you what to invest in, just want you to, you got it now, think like an investor. XLE is an ETF that gives you exposure to that traditional energy space, oil and gas. VDE is created by Vanguard. It's also giving exposure to energy, but this is a little bit more of a broad energy play that gives you exposure to broad energy stocks. XLU is created by SPDR Spider. This is giving exposure to utility companies, electricity, natural gas, transmission. So these are a lot of the companies that are powering data centers. Then of course is NLR. This is created by Van Eck, which is giving you exposure to nuclear and uranium stocks. So what every smart investor wants to know is, where is the money moving? And we know that the largest spender in our economy is none other than the United States government. And through the new 2026 spending plan, we can see that the United States government wants to allocate money into 5 places. Number 1, into artificial intelligence, into rare earths, into American industry, into defense and energy. This can create an investment opportunity, but you have to know how to analyze your investments. Again, I have a free investing masterclass for you down in the description, which can help you learn how to be a better investor. But just because money is moving into an industry doesn't guarantee that your stock or your ETF is going to go up. We could see a recession. We could see a market crash. You can invest into a company that didn't manage the cash well or has a bad CEO, even though the industry is starting to grow. This is where you have to pay attention to, number 1, where's the money moving, but then find a good investment within the industry as well. And when you find those 2 things, that's where you can find some of the biggest and best investment opportunities. But of course, investing has risks. Now, if you got value out of this video, the best thank you is a referral. So if you could, please share this video with a friend, family member, colleague, or fellow investor, that we can continue to spread this type of financial education. Thank you. It is getting harder than ever for the average person to get a job and build wealth because traditional entry-level skills are now being automated by AI. But this is the silver lining, because for those of you that are go-getters that want to go the extra mile, this shift is going to create more millionaires than ever before. And yes, the things that I'm about to show you will apply whether you work a job or run a business.